All right, good news is in store for retirees. New research from Morningstar revealing that retirees seeking a fixed withdrawal rate can now safely withdraw 3.8% from their portfolio over a 30-year period. That's up from only 3.3% 1 year ago. Yahoo Finance's Kerry Hannon joins us with more on this. Kerry, nice to see you.
Nice to see you, Dave. This is Morningstar runs these calculations every year with 1,000 different variables they throw in and look at these scenarios running the computerized models. And, this year they did bump it up to 3.8%. Now, the standard for more than 20 years has been 4%, right? That would be the first year you retire, and then you gradually bump that up to follow inflation in the years that ensue. Last year, they dropped it down to 3.3%, mostly because of market expectations, because that's a big variable there. So people are looking at portfolios. And when they say that number, Dave, they're talking about a balanced portfolio of stocks and bonds. So it can be anywhere from, 30 to 60% in stocks and the rest in bonds. But that's what they're looking at moving forward. And so, this is a good news, but last year's number was low because the market was so high. And so this year they've been able to bump it up because the future forecast for the market is you may see more upside as we move through retirement. A couple things to think about here. There are a couple of caveats. I talked to Christine Benz, one of the authors of the report, and she said, you got to remember that everybody spends in different ways. And retirees often spend initially more money in their first couple of years of retirement, not so much in the middle. And then a little bit more, it ticks up at the end. So there's all kinds of variables. And the other thing she mentioned is so many people think you need to have a really equity heavy portfolio in order to last so you don't run out of money in retirement, which is what most people fear, right? That's going to happen. And she said, frankly, bonds can really be your friend. And some of the highest rate of withdrawals can be if you have a heavy bond portfolio. So I thought that was kind of interesting.
Yeah, we heard that from a guest earlier in the program as well. What are some different strategies that retirees can employ to lock in a higher starting withdrawal?
Yeah, be flexible, right? If you can decide that you're willing to, if you have a losing year in the market and your portfolio is down, that you're going to reduce how much you're going to take out and just trim your spending. Or if you're willing to say, hey, you know what, I'm not going to adjust up for inflation in years ahead, then you can start much higher than at that 3.8%. But it's a matter of your own, what you feel is going to work for you. In addition, it has a lot to do with your time horizon. Frankly, most of us aren't going to need 30 years in retirement, right? So, and depending on what year you actually retire and start that initial thing, you can tick it up quite a bit higher. I think Christine said you could start at 4.4%, depending on your age, if you're, quite a bit older. So the point is you don't have to swing for the fences on these things, but you need to be flexible. And I think that's really how you can get it up. But again, Dave, just remember, these are just a guideline. The most important thing the financial planners I spoke to said is, every year take a look and see what's going on, and then you can decide what's the right amount for you to withdraw. But make sure you have enough cash set aside in order to weather some bad markets or a tough market.
Great advice there. Kerry Hannon, thanks so much.